Welcome to another deep dive. You know we like to get right into it, and today is no different. We're talking markets, moves, and news all happening right now.
It's like having your own personal stock analyst, but without the hefty fees.
Exactly. Just imagine waking up this morning, January 21st, 2025, and wanting to know what's going on.
Well, you came to the right place.
We do have a lot to cover. I mean, you know the Trump bump is back in the news and making waves in certain sectors.
And we can't forget about the USDCAD pair. It's been a wild ride, thanks to some of the political events that have been happening.
Oh, yeah, big time. So let's dive into the numbers, shall we? The S&P 500 is up just slightly, 0.18%.
Reaching 6,025.
The Dow Jones is doing a bit better, though, up 0.56%, hitting 43,775. But the Nasdaq is actually down.
Just under 0.5%, landing at 19,641.
Interesting. What do you make of that?
Well, it could be a sign that investors are maybe shifting their sentiment a little bit. You see the S&P and the Dow, they represent the broader market, and they're showing gains.
But the Nasdaq, which is really tech-heavy, isn't keeping up.
Right. So it might mean that investors are moving towards more established companies, maybe ones that are more value-driven.
Instead of those high-growth tech companies that can be a bit more volatile.
Exactly.
Makes you wonder what's causing this shift. I mean, is it a reaction to something specific, or is it a bigger trend that we should be paying attention to?
Yeah, definitely something to keep an eye on.
Now, the Russell 2000, that tracks the smaller companies. It's holding steady with a 0.47% increase, reaching 2,297. That's a good sign.
It is. It shows that investors still have some appetite for risk. They're willing to bet on companies that have growth potential.
Even in a market where things are a little bit uncertain, right?
Right.
Okay, so we've got some mixed signals from the market overall, but things are still pretty active. But let's talk Bitcoin. It's broken through that $100,000 mark again, sitting at 103,265.
That's a gain of over 1%.
Wow. Remember when breaking 10,000 felt like a big deal? Now we're talking six figures as the new normal for Bitcoin.
It's amazing how much the crypto landscape has changed, how much it's matured. Investors are really starting to see it as a legitimate asset class.
So what do you think this new surge means? Is it a taste of what's to come, or is it just another blip on the radar?
It's hard to say for sure. You know, Bitcoin can be unpredictable. It's notoriously volatile, which makes it difficult to predict where it's headed in the long term.
That's true.
But this surge, happening at a time when there's a lot of political and economic uncertainty, could be a sign. It suggests that some people are seeing Bitcoin as a safe haven asset.
A hedge against the ups and downs of the traditional market.
Right.
Okay, so maybe a bit of both then. A sign that it's becoming more accepted, but also a reflection of what's happening in the world right now.
Exactly.
Definitely something to watch closely. And speaking of crypto, Ethereum is holding pretty steady at $3,282, just a tiny increase of 0.05%. But stable can be good, right?
Oh, absolutely, especially in a market like this.
So it shows a level of maturity, wouldn't you say? A kind of resilience that we didn't see in those early days of Ethereum.
It does. It does.
Okay, so crypto's doing its thing, and the overall market is giving us some mixed messages. But there's one sector that's absolutely booming right now: energy.
Literally on fire.
It is. It's like someone lit a match to the whole sector. And you know what? I think that match might have Trump 2.0 written all over it.
With the return of former President Trump and his renewed focus on U.S. oil and gas production, we're seeing a surge in energy stocks across the board.
I mean, just look at Halliburton, Schlumberger, uranium energy, Exxon, Chevron. They're all rallying like crazy.
It's a real energy frenzy.
It is. But it's not just politics driving this, right? There have to be some serious economic factors involved.
Absolutely. Trump's policies, particularly his focus on deregulation, are having a real impact on the energy sector.
And don't forget about his push for U.S. energy independence. Investors see this as a huge opportunity. They're optimistic about growth and profits in the coming years. So it's not just a knee-jerk reaction to political events. It's a bet on the future of U.S. energy. It's a bet that these companies will thrive under these favorable policies. But this also raises questions, doesn't it? I mean, what about climate change? What about the transition to renewable energy?
Yes, and the global energy landscape as a whole. There are a lot of factors at play here.
It's a reminder that the market is about more than just numbers and trends. It reflects our values, our priorities. It reflects the choices we make as a society.
And those choices have consequences that reach far beyond Wall Street.
For sure. But right now, the energy sector is riding high on the Trump bump, and we'll be watching to see how this all plays out.
It'll be interesting to see.
Now, for a twist you might not see coming, Tesla is also enjoying a bit of a Trump bump. Surprising, right?
It does seem a bit counterintuitive given his previous stance on electric vehicles.
Exactly.
But investors are betting that Tesla, with Elon Musk at the helm, will actually benefit from some of Trump's policies.
So break it down for us. What policies are we talking about? How could they possibly benefit Tesla?
While deregulation could be a big one, it could streamline their production and lower compliance costs.
And his focus on infrastructure development could also help.
Especially things like charging stations. That could create a much more favorable environment for people to adopt electric vehicles, which would indirectly benefit Tesla.
So it's not about directly supporting EVs, it's more about creating a better overall environment for companies like Tesla to succeed. Almost like an unintentional boost.
It really highlights how interconnected the market is. Sometimes seemingly unrelated policies can have the most unexpected effects.
Makes you wonder how much of this Trump bump is about actual policy impacts and how much is just speculation and market sentiment.
It's a complicated equation.
It is.
But one thing's for sure, Tesla is operating in a very dynamic environment. They're facing increasing competition in the electric vehicle market.
And a political climate that's as unpredictable as it is potentially beneficial. Absolutely. And speaking of companies tied to the Trump name, let's talk about Trump Media and Technology. It's been a bit of a roller coaster ride for them lately with a recent 10% drop. What's happening there?
Well, that drop follows a period of significant gains after the election. Some investors are cashing in their profits, while others are waiting to see what the company does under Trump's leadership.
So it's a bit of take the money and run and a bit of wait and see.
Exactly.
Makes sense. But here's where things get really interesting. Trump Coin, the digital asset tied to Trump's various ventures, is actually on the rise. What do you think is driving that?
Well, it's likely tied to the same factors driving the Trump bump in other sectors: political enthusiasm, speculation, and the belief that Trump's return to power will benefit his businesses.
So like a miniature version of the Trump bump, but playing out in the world of digital assets.
Precisely.
It's amazing how these trends can ripple through parts of the market. But it really underlines the importance of understanding what's driving these trends.
Right. Is this a temporary surge fueled by hype and speculation, or is there something more substantial going on?
That's the million-dollar question, isn't it?
It is, and the answer is probably a little bit of both.
Okay, so we've got a lot to digest here. We've got the Trump bump influencing everything from energy to tech to digital assets. We've got Bitcoin surging while Ethereum stays stable. But before we dive deeper into all of that, let's shift our attention to something else that's been very volatile lately, the USDCAD currency pair.
It's been all over the place.
It has, swinging wildly in response to Trump's inauguration speech and his recent executive orders. It's like a crazy tennis match, the ball just flying back and forth.
Well, the USDCAD pair is very sensitive to political events and policy announcements, particularly those that impact trade relations between the U.S. and Canada.
And considering Trump's history with trade, I mean, his unpredictable moves, it's no surprise the USDCAD pair is in for a wild ride.
Not at all.
But for those who might not be familiar with currency trading, could you explain what this specific pair represents and why it matters, even if you're not a Forex trader?
Sure. The USDCAD pair basically shows the value of the US dollar against the Canadian dollar. It's a measure of how much one US dollar is worth in Canadian dollars.
And it matters because it impacts the cost of goods and services traded between the two countries.
Exactly. For example, if the US dollar gets stronger against the Canadian dollar, imports from the US become more expensive for Canadians.
And exports from Canada become cheaper for buyers in the US.
Right.
So even if you're not actively trading currencies, these fluctuations can hit you right in the wallet, especially if you're buying things across the border. It just goes to show how interconnected the market is. Events that seem far away can still have a direct impact on our everyday lives.
They can.
And looking at what's happening right now, it seems like we could be in for even more volatility with the USDCAD pair.
The charts are pointing in that direction. Trump's actions and policies are creating shockwaves through the market, and it's going to take a while for things to settle down.
So it's buckle up time, everybody. We might be in for a bumpy ride.
We might.
But for those who can navigate these twists and turns, understand the forces at play, and make smart decisions, there are definitely opportunities out there. And that's what we're here to help you do,
That's right.
to break it all down and give you the information you need to succeed.
It really is. It's an exciting time to be following the markets, that's for sure. So much happening, all these different pieces connecting in these interesting ways.
It's like this giant machine,
Yeah.
complex, all these moving parts working together, influencing each other, trying to figure out how it all works, what's going to happen next. That's what keeps us coming back. But let's zoom out for a second. Look at the big picture. What are the big implications of all these market moves? What does it mean for the global economy, for different industries? Ultimately, what does it mean for you?
Great question, and one that's on the minds of a lot of people right now. Investors, analysts, everyone's trying to figure it out. Let's start with energy. We talked about the surge it's seeing because of the Trump bump.
Right.
Well, this resurgence in U.S. oil and gas production, it's sending ripples through the global energy markets.
It's a global story, not just a U.S. story. How are other oil-producing countries reacting to this shift in U.S. energy policy?
Well, think about it this way. Increased production in the U.S. That could lead to a surplus of oil globally, which could push prices down.
Makes sense.
And that puts pressure on OPEC.
OPEC?
Yeah, the Organization of the Petroleum Exporting Countries. They have to adjust their output to try and stabilize prices. It's a bit of a tug of war. The U.S. is becoming this dominant energy producer, and OPEC is trying to maintain its influence.
A power struggle with big implications.
Yeah.
Economically, geopolitically, the outcome affects energy prices, energy security, even political alliances around the world. High stakes. But it's not just OPEC, right? You've got other players like Russia, major oil producer. How do they fit in?
Russia's got their own interests. They've been trying to grow their market share. With the U.S. becoming more dominant, Russia might have to switch things up a bit.
Sure.
Maybe work more closely with OPEC or find new markets for their oil. Adds another layer of complexity to this whole global energy landscape.
It's amazing how these events trigger these chain reactions, each player adjusting, reacting to what the others are doing.
Right.
Really shows how interconnected everything is. But this comeback of fossil fuels, it does raise concerns about renewable energy, doesn't it? What are your thoughts on that?
Yeah, it's a valid concern. Trump's focus on those traditional energy sources,
Yeah.
it could slow down the move towards cleaner energy, at least in the short term.
Okay.
But it's important to remember the shift to renewables, it's driven by a lot of factors. Technology is getting better, costs are coming down, and there's this growing global awareness of climate change.
So a possible bump in the road, but the long-term trend towards renewables is likely to continue.
That's what most experts seem to think. There's too much momentum behind it. It's not going to be completely derailed just because of policy shifts in one country, even a powerful one like the U.S. But the pace of the transition, that could be affected, and that has implications for the fight against climate change.
Makes you think about the best way forward, doesn't it? Balancing the need for energy security and economic growth with the need to address climate change. It's a big question. But let's shift gears for a minute. Talk about another industry that's facing challenges, tech. You mentioned earlier that tech giants like Apple and Google are rethinking their strategies. Data privacy, antitrust issues. What kind of changes are we talking about here? How might they affect the way we use technology?
Well, there's this movement towards stricter rules around data, how it's collected, how it's used. Governments everywhere are enacting laws and protect consumer privacy. Tech companies are under pressure to be more open about what they do with our data, could change how we interact with online platforms, more emphasis on user consent, data security.
More control over our data, more privacy. Sounds like a good thing. What about antitrust? What's happening there?
There's this idea gaining traction that some of these tech giants are just too big, too much power.
Right.
The thought is maybe break them up, create smaller, more focused companies. That could lead to more competition, more innovation down the road.
So a less concentrated tech landscape, more players competing for our attention, our business. Tough to say what the outcome will be, but it's a pivotal moment for tech. Decisions made now will shape the future of the digital world.
Definitely. And all this is happening against a backdrop of rapid technological change. AI, blockchain, all these emerging technologies reshaping the digital world. It's an exciting and a challenging time for the tech industry.
It's a good reminder that every industry is vulnerable to disruption. Being able to adapt, to innovate, that's essential for survival. Let's talk about another sector that's always affected by political and economic shifts: finance. Banks are watching closely to see how Trump's deregulation policies play out. What's at stake here? How might these policies affect the average person?
Deregulation, it's a two-sided coin.
So,
On one side, it can cut through red tape for businesses, makes it easier to lend money, stimulate economic growth, could lead to more jobs, more investment. Good for the overall economy.
So potential for positive outcomes,
Yep.
economic growth, job creation. But you said two-sided coin. What's the other side?
The flip side is deregulation can lead to risky behavior if it's not done carefully. We saw this before the 2008 crisis. Lax regulation played a role in the housing bubble, the market crash. So it's about finding that balance. The right level of regulation that encourages growth but also protects against those big systemic risks.
A delicate balance. And a reminder that even well-intentioned policies can have unintended consequences. We've been focused on the U.S., but it's important to remember we live in a globalized world. What happens in one country can ripple outwards. How are these events in the U.S. impacting the global economy? What should we be paying attention to?
Well, the U.S. is the biggest economy in the world. Any big changes in their policy or performance, it's going to have a global impact. We're already seeing it, energy and trade, the surge in U.S. oil production, affecting global prices and supply chains. And Trump's trade policies, the ones focused on protectionism, those have the potential to disrupt global trade, create uncertainty.
It all comes back to that interconnectedness. What happens in the U.S. doesn't stay in the U.S.
Exactly. We're all part of this global system. We need to understand how events in different parts of the world can affect us, directly, indirectly.
It's a lot to process, isn't it? But that's what we do here. We help you navigate this complex world, make informed decisions.
And remember, knowledge is power. The more you understand about how the market works, the better equipped you'll be to make good investment decisions.
Speaking of knowledge, we talked earlier about PantheonAI's equity AI platform. It can help investors make sense of all this.
Absolutely. Equity AI uses artificial intelligence to analyze huge amounts of data, find patterns, generate insights, things you might not see otherwise. It can help investors make better decisions.
So it's like having a team of analysts working for you, crunching numbers, finding those hidden trends, a powerful tool for anyone who's serious about investing.
It is. It's a great example of how technology is changing the world of finance, making it more accessible, more data-driven.
It's a really exciting time to be an investor. All these new tools and technologies coming out all the time. But technology is just a tool. It's up to us to use it wisely, to make smart decisions based on a real understanding of the market. And that's what we're here to help you do. We're your guides, helping you navigate the ups and downs, the twists and turns of this ever-changing market.
And remember, this is just a snapshot. The market's always moving. The story isn't over. What seems like a major event today might be a footnote tomorrow.
It's a reminder to stay engaged, to keep learning. Never stop asking questions. The market rewards those who are curious, adaptable, those who are always trying to learn more. It's like we've been on a whirlwind tour of the market today, hitting all the major spots, even uncovering some hidden gems along the way.
We've covered a lot of ground, that's for sure. From the Trump bump and how it's impacting things to the changes happening in tech and finance. And we even talked about how all this is playing out globally, how interconnected everything is.
And I think the big takeaway is that knowledge really is power. The more you know about what's happening, the trends, the risks, the opportunities, the better decisions you can make, whether you're a seasoned investor or just starting out.
Couldn't agree more. And it's not just about having the knowledge, it's knowing how to use it, connecting the dots, seeing the bigger picture, making decisions that work for you, your goals, and how much risk you're comfortable with.
So it's more than just reacting to headlines. It's about digging deeper, understanding those underlying forces that are shaping the market, and being proactive, anticipating what might happen, and positioning yourself accordingly.
Exactly. And that's where having the right tools and resources can make a difference. We talked about PantheonAI's equity AI platform. It can help investors analyze data, identify those patterns, see those insights that might not be obvious.
It's like having a secret weapon for your investments, a way to level up and gain that edge in a market that's getting more complex and data-driven all the time.
And it's not just about technology either. It's about having access to experts, people who can help you understand the data, make sense of the trends, and guide you through the complexities of the market.
And that's where resources like the Deep Dive come in. We're here to give you the knowledge, the insights, the guidance to help you make those informed decisions and reach your financial goals. We're your companions on this journey, helping you navigate the ups and downs, the twists and turns, this constantly changing market.
And remember, this is just a glimpse, a snapshot. The market is always moving, and the story keeps going. What feels huge today could be a tiny detail tomorrow.
It's a reminder that we have to stay engaged, stay curious, never stop learning. The market rewards those who ask questions, who can adapt, who are always trying to deepen their understanding.
So as we wrap up this deep dive, I want to leave you with this thought.
We've explored the market from all angles, looked at the forces at play, uncovered some key insights. But the real journey starts now.
It's your turn to take what you've learned and apply it to your situation. Continue your own deep dive. What are you going to explore further? What questions are you going to ask? What actions will you take?
The answers to those questions are up to you. But we hope this episode has given you the tools and the inspiration to keep learning, to stay ahead of the game, and to achieve those financial goals. Until next time, stay curious, stay informed, and keep diving deeper.